Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 4th of December 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, as ever, let's kick off with a look at the overnight changes and price moves to be aware of. And there's really just one theme running through the foreign exchange markets yesterday. And that is really the story of dollar weakness and gains from other currencies, typified here by euro dollar, the euro gaining 0.31% against the greenback over the course of the session yesterday. And we've seen further gains from the Australian and New Zealand dollars against the US rival as well. The New Zealand dollar going great guns, adding 0.51%. And building on weekly and monthly gains that we talked about yesterday. The Chinese Yuan was also on the front foot against the dollar, gaining 0.59%, against its US rival. Dollar index for its part trading back at 96.67, down by some 0.38% over the session. Okay, well, what's on the calendar then? Events that may move the markets today. Well, it's a pretty compact calendar today. I think that's fair to say. We've already heard earlier this morning at 3:30 GMT from the Reserve Bank of Australia at their interest rate meeting. There was no change in interest rates, but there was a brief comment from Philip Lowe, and we'll look at that in a bit more detail momentarily. To come at 8:15 GMT, we shall have Swiss Consumer Price Index data for the month of November. And that'll be followed at 9:15 by a speech from the Bank of England's Governor Mark Carney. Then at 9:30, staying in the UK for PMI construction data for the month of November. This always has resonance with UK investors because of the importance of house prices and the construction sector to the UK economy. And then we take a significant break till 1500 this afternoon when we'll hear from FOMC member Williams, who has the second of the day's central banker speeches. And then at 1800 he's back to the UK for MPC member Villiger to round off the day with the third central banker speech. Okay, breaking news and comment then that's caught my eye overnight. And first of all then, the RBA left Australian interest rates on hold at 1.5% and said that there are positive but gradual signs that the economy is picking up. So not racing to raise rates, but they are at least mildly positive about what's happening in the underlying Australian economy. Meanwhile, China's renminbi yuan has hit a 2-month high versus the US dollar as markets breathe what we might call a collective sigh of relief following the trade war truce that was agreed at the weekend. Oil prices have continued to improve on hopes of production cuts that may be announced at Thursday's OPEC meeting in Vienna. And the Yellow Vest or Gilets Jaunes protests continue in France as demonstrators vent their anger about President Macron's tax reforms that are seen as likely to hit the lower incomes the hardest. Okay, well, time for food for thought and something to take away with you into the trading day and beyond. And why not think about this? Asset manager State Street advisors recently surveyed their customers to find out what their concerns were about investing in 2019. And you can see the list of concerns here graduated from top to bottom. It's a familiar list of concerns, although it's interesting to note that developments at the weekend around trade and strong US data yesterday have perhaps cooled some of these fears down and warmed others up. And the survey was conducted, as you can see, on the 16th of November, so just over 2 weeks ago. It's interesting how the macro background can change even in that short time, or at least perceptions around it can. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're uncertain about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And do take a moment, please, to read this risk warning thoroughly. Thank you for your time today.